Welcome to TradeTheMBI.com. This is John. This report is for the 18th. And, well, we got that back and forth that I was talking about. Even though we had the fade off of MBI White, still wasn't a whole lot of excitement given the fact that Cyan on the DOC still leads, and you already have an elevated DOC steel. So without a reset below cyan or orange, you kind of get that soft continuation, and that's sort of what we're seeing, a back and forth in between. Again, like I said, unless there's an escalation in what's taking place with the Middle East and things like that, the push is still going to be the counter trade, which would be to the upside, and it's going to be a bit back and forth. And you can see from an NQ standpoint, we're still dipping down towards the lows, but that just is attracting buyers on the dip, and that's been elevating things back up. The NQ though, look at that MBI reading, much different than the S&P, where you already have magenta below, yellow, and heading to the 25. If it breaks below the 25, you're definitely looking at a much more negative viewpoint. So the market's got challenges, I think is the easiest way to describe it. And again, with the escalation, you have obviously Putin in China and the discussions with Iran, of course, the threat of the ground incursion in Gaza. These are kind of things that are going to upset the market in ways because they create a lot of unknowns, and escalations can happen very quickly. You get a lot of threats back and forth. Treasury yields obviously rising, getting now back at the peak level. And as long as the U.S. economy isn't in a collapse mode, it really puts a lot of pressure on the Fed, and this does not help things. As you see, oil rebounding significantly off of the brief fade. It just filled positive extremes, is all it did, and nothing unexpected from our viewpoint on that. But the pressure to oil is still to the upside, and no relief from that whatsoever. The only significant factor would be a significant economic slowdown, which would definitely ease things, but it would also create other complications throughout other asset classes. And that, from a euro standpoint, pressure back up to that 23%, but still very problematic for the euro, particularly if that oil continues to rise for the next few more days. You definitely see a return back down. And a lot of it depends too on the positioning of the Fed and whether or not they would have to, in a crisis mode, go back to easing in that kind of situation, in which case this is no shock. The fact that we even had this deep a depression in gold, we saw that as a clear opportunity once the turnaround from the MBI readings was there. There's no shock whatsoever on the turnaround from there. And of course, that's attracted attention into Bitcoin. They had the big pullback. That's not unusual with the limited trade capability within that, but still, overall pressure to the upside from that standpoint. The laggard here has been ETH, just not able to put together nearly the excitement that Bitcoin does, at least from a hedge standpoint, more of a longer term configuration. From a 50K standpoint, so started off with the sell signal, had the nice deep dip, but turnaround was pretty fast, and now we're moving back into there. And so you can see it's kind of this narrowing of the Morganacci lines, and that just creates that kind of zone trade back and forth. We can see that from a 50K, weakness is already starting to build back in because you got to pivot below the 25 with MBI weight leading, and that's going to put pressure at least to the 50%. If we get back down to that 50%, the ability to hold is unlikely if you get a continuation of that MBI weight to the lead. And so that would be your mid-range indicator. You can see from market day yesterday, started off weak. That created a lot of excitement to the buildup, but it was all on positive extremes, and all that did was cause them to be refilled, which is just a beautiful thing to witness as that takes place. And of course, in the early hours of pre-market here, we're just getting a lot of bounce back and forth and fairly neutral. We're off just about 7 points at this particular stage, but that's a pretty decent recovery from where we were dipped down to from below. So, and again, from that NASDAQ standpoint, we still have that much lower positive extreme that will need to get filled, and it's not going to take much of a news shock, so to speak, to have that take place and be completely filled. So that's long and the short of it. Again, we're just going to continue to follow what we've got from the reading standpoint, and I think that world events are really going to be the dictator in this particular case, absent anything else. The counter trade is still to push a little bit to the upside with things, but I don't. It's not going to take much to tilt that to the other side with world events. So, being ready for that kind of alteration is important. So, stay on top of it, and as always, I will keep updating on Skype Chat anything relevant. Trade well. Have a good one.